Hello, and welcome to another episode of this. No, just kidding. This is not another episode of This Week in Gold Making. This is not an episode of anything, but it's my stream where we're gonna go over Activision Blizzard fourth quarter 2018 financial results announcements, quarterly earnings call, blah 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 blah. I'm sure many of you are aware that looking at company earnings reports has become all the rage in the World of Warcraft content creation community at large, which probably says something about World of Warcraft content as a whole. But that's not what we're here to discuss. I am here to discuss the earnings call and update with the model. Did a little bit of work on this when the earnings first came out, just to get some kind of cursory numbers to make some interesting tweets about. The most interesting initial information that's been gleaned from the quarterly earnings report is actually this little row down here. Let's actually extend this out, because this is overall percentage of sales. Oh, actually, let's make this a little bigger so y'all can actually see. Sales percentage of revenue, subs percentage of revenue. So when Activision Blizzard reports their earnings, I don't know if it'll actually show up on here or not. They divide their total revenue into product sales and subscription licensing and other revenues. This is actually kind of interesting because we were talking on Twitter a little bit about this, and specifically my boy Billis had a question regarding, posed the question regarding WoW tokens. How are WoW tokens factored into this number here? This line, this total net revenues, the actual money that Blizzard takes in. So I asked the question to, sure, why not? To Activision Blizzard's investor relations to see what they had to say about it, and zoom in on this a little bit so we can actually see. Happy to jump on a call to discuss this next week. I'll probably go ahead and do that, see if I can glean some more information. But in short, it'll fall under sales. That's not really what we look at, how we look at the business. So this was kind of interesting to me, because it seemed odd that they would report sales and subscriptions as the two main segments for their revenue, but then when they look at the business, they look at total revenue, obviously digital revenue and physical revenue, which, that does make sense as a paradigm to look at your, sales that you're taking in. And I can't remember who exactly it was. Thanks, Gumdrops, for that but we were having a little discussion in this thread about, Mr. Stephen Potter, Storms9079 on Twitter. They report revenue and sales subs due to accounting standards. Generally, the way you look at business internally is thrown out the window when it comes to reporting to regulatory bodies and the stock exchange. That actually makes a ton of sense. Activision Blizzard probably doesn't have a whole lot of control over what they can do here. Hold on just 1 second. I'm going to close this. You guys probably can't hear it, but we got some laundry going in the background, and it's bothering me, so it'll be just 1 second. All right, and we're back. Anyway, the point is, oftentimes when you're dealing with the SEC, which is the regulatory body that requires you to have all this, all these numbers, you don't have a lot of choice in what you're actually doing. So anyway, the point is that I was trying to get at, these numbers are just taken directly off of Activision Blizzard's quarterly reports. And what it says is, back in 2013, 70% of Blizzard's revenue came from sales, and 30% came from subscriptions, or licensing, or other. Then gradually, over the course of 5 years, it did a little bit of a flip-flop, right? 63%, 52%, 50%, 30% for sales, and then the opposite, of course, for subscriptions. And then over the past 2 years, both 2017 and 2018, seems to be stabilizing at the 30-70 split for sales and subs. Very interesting. The first thing that came to my mind, actually, about this was for is it like a comparison to Microsoft? I don't know if I have the exact stuff here as well, but we could probably quickly do this. Yeah, let's go. Give me just a second here. Give myself some rows. Oops. Okay, so we want to do products, services, and others. So products would be like their sales. Divide that by total. You get 68%. That's not actually how the formula works. This goes like that. 32%. Extend that back there. I don't have all the historical data, but interesting. So, obviously I didn't come prepared with the Microsoft stuff to make the comparison, but from reading Microsoft's, information and doing the research that I have on the company itself, they kind of underwent a similar situation where, right, like, what's Microsoft known for? Windows and Word. Okay, that's sales. But more recently, if you read through like their annual reports and their quarterly reports, you'll notice that they're like shifting their business towards the subscription model stuff. You have to pay if you go to Microsoft's site, Microsoft Word, right? If you want to buy Office, they really, 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 really try to get you to subscribe and buy a thing where it like renews every week, or not every week, every year, whatever the payment plan is. Which is good business sense, right? Because subscriptions are a renewable source of revenue, right? If you go buy Excel like I did for 2 different computers, you pay it once, and Microsoft never sees that money again, and they still are expected to support it with updates because that's just the world we live in these days when it comes to software. I don't know why it's taking so long. Yeah, so there you go. You're immediately met with, there you go, $99 per year, $69 per year if you're going for personal, home, I don't know what all the differences are. Or you can do the one-time purchase, which is significantly more, right? So they're really trying to persuade you into doing the subscription stuff. Anyway, and that's the thing, man, with Blizzard, Activision Blizzard, they've been doing this subscription thing for a long time, right? Obviously, World of Warcraft kind of revolutionized the industry of gaming with this idea that you can expect players to pay $15 a month in order to get access to the game. It's huge. You look through, Blizzard's quarterly reports, and let's just go ahead and look. The amount of revenue they generate from just WoW subscriptions is kind of astronomical. I don't know if I'm able to find it in here real quick. Subscription. Subscriptions are WoW's pride. Continual access to game content. Subscription arrangements. Don't think that's what I want. Revenues attributable to the purchase of World of Warcraft software customers, including expansion packs, classified as product sales, whereas revenues attributed to subscriptions. This is good information. I mean, this is pretty obvious, right? Like if you buy the game, the expansion packs, that's sales. Subscriptions are subscriptions. Fine. That's not really new information. Contact balances. No. Including subscriptions, full game titles. Yeah, this is all just information. Did we cycle back around yet? Nope. Maybe it's actually, here we go. The decrease in blah, 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 decrease, blah, blah, blah. No, that's not it either. Maybe it was in the actual, one of their annual reports that I was reading, because you get a little bit more detail in the annual reports as opposed to the actual quarterly reports. Anyway, let's stop beating around the bush. We have an earnings call to listen to. I'm going to don the headset. Hello? Is this thing on? There we go. And we're going to boot this bad boy up. And we're going to listen to the old webcast. You can know my last initial.
Good day, and welcome to the Activision Blizzard Q4 2018 earnings conference call. Today's conference is being recorded. At this time, I would like to turn the conference over to Chris Hickey. Please go ahead, sir.
Good afternoon, and thank you for joining us today for Activision Blizzard's...
All right, so this is going to go over like some legal nonsense they have to do every time.
Cody Johnson, COO, and Dennis Durkin, Company CFO and President of Emerging Businesses. And for Q&A, Rob Kostic, President of Activision, J. Allen Brack, President of Blizzard, Ricardo Sacconi, CEO of King, and Humam Sakini, President of King, will also join us. I would like to remind everyone that during this call we will be making statements that are not historical facts. The forward-looking statements in this presentation
while this is going, I'm probably going to do a little bit
as of the date of this presentation. And while we believe them to be true, they ultimately may prove to be incorrect.
As well.
A number of factors could cause the company's actual future results and other future circumstances to differ materially from those expressed in any forward-looking statements. These include the risk factors discussed in our SEC filings, including our 2017 annual report on Form 10-K and those on the slide that is showing. The company undertakes no obligation to release publicly any revisions to any forward-looking statements to reflect events or circumstances after today, February 12, 2019. We will present both GAAP and non-GAAP financial measures during this call. We provide non-GAAP financial measures which exclude the impact of expenses related to
video players and the greatest. Can't really skip ahead.
Of intangible
I mean, I can, but it was not like previous. I can't tell where it's moving on to the actual good stuff. This is just disclosure of legal nonsense. I have to say that for everything.
Restructuring charges, the associated tax benefit of these excluded items, and the impact of certain significant discrete tax-related items. These non-GAAP measures are not intended to be considered in isolation
PowerPoint, man.
as a substitute for or superior to our GAAP results. We encourage investors to consider all measures before making an investment decision. Please refer to our earnings release, which is posted on www.activisionblizzard.com for a full GAAP to non-GAAP reconciliation and further explanation with respect to our non-GAAP measures. There's also an earnings presentation which you can access with the webcast and which will be posted to the website following the call. In addition, we will also be posting a financial overview highlighting both GAAP and non-GAAP results.
All right, financial overview, that's what this is.
Our CEO, Bobby Kotick.
All right, Bobby, what do you got?
Chris, and thank you all for joining us today. We once again achieved record results in 2018. We delivered record GAAP revenue.
Okay, so, I want to go into a little bit more detail on that record results thing, right? Because that's obviously been something that's been pretty haughtily contested for this earnings report because, there's a lot of layoffs and record results. So, people see that as somewhat of a conflicting measure. So real quick, let me just update this. So this is GAAP revenues for 2018, $2,381,000,000. This is all in millions. These things typically are for the bigger companies. So we can use this to go there. And then actually we can probably just derive this times 0.7. And then this equals that minus that. It's funny. Whenever I start typing things on Excel, my OBS starts changing around because I have all my scenes hotkeyed to the numpad. Anyway, so okay, here you go. This is what they're talking about at record revenues, right? They brought in $2,381,000,000 in in gross revenue for the fourth quarter 2018. Now, typically, as you'll notice, over the years, Q4 is always a bit of a higher revenue section for Activision Blizzard, right? That makes sense. Q4 is when Christmas is, people are buying gifts, people are on Christmas vacation, so they're buying more WoW stuff or buying whatever stuff. Okay, that's a pretty well-known fact. And yeah, as you can see, year over year, I believe I actually have the quarterly revenue year over year. We can extend this out and see. This is sub-revenue year over year. 70% increase from last year. Yeah, that's pretty big. 14% increase 1% increase the previous year. And then 50% increase the previous year, right? Like this jump from 2015 to 2016 was a pretty big deal. That was almost not quite doubled, but like that's a pretty big jump in revenue. Make sure we can read those up there. So yeah, there you go. That's really the kind of deal. Subscriptions are up 17% from year. I should mention this year over year figure. That's looking at the previous quarter, not the previous quarter, but the previous Q4, the previous Q3. If you're looking at Q3. Anyway, yeah, just wanted to point that out real quick. Let's continue.
Revenue and GAAP and non-GAAP EPS for both the fourth quarter and the year. For 2018, we generated record GAAP revenues across all three platforms, and both Activision and King achieved record segment financial results. While we had record performance in 2018, it didn't quite live up to our expectations. We didn't execute as well as we hoped to in 2018, and our current outlook for 2019 falls below what is possible in an industry filled with growth opportunities.
Okay.
We measure our success by growth in reach, engagement, and player investment.
My take on that is like Blizzard games, Activision Blizzard games even, have always historically been really good quality. Really liked by the community, by the gaming community. Yeah, like Black Ops 4 Battle Royale was kind of a flash in the pan. You know, WoW's shadow its former self. Overwatch, they tried to make it an esport, and like Overwatch League is pretty cool and all, but man, that's another thing, another discussion for another time. The last good esports ready game Activision Blizzard made was freaking StarCraft 2. I will stand by that.
And while we had record financial results in 2018, we didn't achieve the reach, engagement, and player investment goals we set for ourselves. 2019 will require significant change to enable us to achieve our long-term goals and objectives.
Significant change. There you go.
We're making changes to enable our development teams to create better content for our biggest franchises more quickly. Across our key franchises, we're adding development talent to ensure our teams can deliver
So, obviously, people getting laid off when there's record profits. That doesn't look good. It doesn't matter how you frame it. I actually spent quite a decent amount of time thinking about this, and yeah, the optics on it are just bad. I'm not convinced that Activision Blizzard won't recover and push forward through the bad press, but man, yeah, that sucks. It's never good when you have to lay off 8% of your employees. That's just awful. It's encouraging that they are trying to focus their efforts on increasing the money and the resources they spend towards their biggest performers, right? Blizzard games like WoW, Overwatch. I think Call of Duty falls into the category of that. And I don't know, Candy Crush, I guess, is what King does. So if they're focusing more resources on the successful stuff, that's good in general for the future of the games we do like. I hope it didn't come at too great of a cost of having to let go of a bunch of people.
Exactly what our fans have come to expect from our games. A consistent flow of compelling content. We'll also increase our focus on adjacent opportunities with demonstrated potential like esports for Overwatch League and Call of Duty.
Get rid of the esports.
We're staffing up production on our incubation efforts faster and increasing our investment in live services, in our tools, in our Battle.net platform, and in new areas like our fast-growing esports and advertising efforts, but all with an intense focus on excellence, so we never disappoint our players. Our pipeline is excellent, and our development talent the very best in the world, but we need to refocus our efforts so that our development and production resources are better aligned with our priorities. We're reducing or eliminating investment in games and initiatives that weren't living up to player expectations, or our leadership teams have determined may not live up to player expectations.
I mean, that's a good business decision. HOTS Esports was never... Blizzard lost out on the MOBA thing when they decided to let Dota 2 happen and didn't take advantage of the fact that they had the most popular MOBA ever, at least at the time, in the fact that Dota was a Warcraft 3 custom ad. If they could have capitalized on that, missed the boat on that, never should have made HOTS in the first place.
And to fund development investment, we will, in certain parts of the business, reduce complexity and duplication in our back office functions, consolidate certain commercial operations, and revamp our consumer marketing capabilities to reflect our continued migration to a largely digital network.
That does actually make a lot of sense that browsing through Twitter and seeing the posts from people who are talking about being let go from Blizzard, it seemed like there was a decent amount in sort of the marketing, PR, sales area. And that makes a lot of sense. It's very much in line with what he's saying there. You look at, I think there's information somewhere in here about where the actual revenue comes from, like digital versus, yeah, there you go. That's exactly it. This is all you need to know. 75% of the total revenue comes from digital online channels. Retail is dying, basically. So, yeah, it makes sense that you'll want to not spend as much money on retail market. Spend almost no money on retail marketing. Spend any money that you are going to spend on marketing on digital stuff. And that money really shouldn't be that much because, I don't know, it kind of markets itself. There's really low overhead when you're talking about stuff on the internet.
While this isn't a shift in our strategy, achieving better execution requires change. Change that requires new leadership and organizational.
Yeah, they keep talking about this change. This is
operate
all just
in an
corporate speak for,
industry
we're going to fire a bunch of people.
growth and real potential,
Not fire, let people
and
go.
we haven't grown
It's a difference, I
at
guess.
the rates that reflect the opportunities our industry affords. We have new business unit leadership committed to serving our players, our employees, and our shareholders. And I'm also very pleased to have Dennis Durkin back as CFO and overseeing our emerging business.
All right,
His
Dennis.
steady, responsible stewardship of our capital.
I joke, but it's actually really important to know and
served
study
us well
the
during his
kind of
5
the
years
leadership
prior
of any
tenure
company that
as
you're looking
CFO.
at investing
As
in or just
always,
caring
I want
about,
to thank
because
our customers, our players, and our
yeah,
partners,
leadership's a big deal.
but especially today, our employees and our shareholders for their commitment and their support.
Yeah,
And now,
support.
Hadi?
Thanks, Bobby.
I still don't have that many
Before
notes
we
on Bobby.
discuss the important steps we are taking to reinforce the foundation for future growth, let's first review our quarterly results. In Q4, we generated record GAAP revenues of $2.38 billion, including the net deferral of $454 million.
Yeah, we're getting into the meat of it.
Net bookings were also a record at $2.84 billion. We generated Q4 GAAP EPS of 84 cents and Q4 non-GAAP EPS of 90 cents, also both Q4 company records, including the net deferral of 39 cents. While GAAP revenue, net bookings, and both GAAP and non-GAAP EPS were company records, our net bookings fell short of our outlook.
Oh, operating
I will
numbers.
explain in our segment results.
Wait a second.
Activision Q4 segment revenues grew 6% year over year to $1.41 billion.
Get the monthly active users. All right, so total monthly active users is going to just be math. Let's see. King had 268 million active users. That's up, actually, from last quarter. It's kind of been flatlined, down a little bit from last year. Blizzard had 35 million monthly active users, and Activision had 53 million. All right, so there you go. That's a total of 365. That's 1 million active users for every day of the year.
And operating income increased 14% year over year to $723 million, with monthly active users increasing double digits quarter over quarter.
51% operating margin is pretty impressive.
The primary driver for the Activision segment was Call of Duty, which generated more upfront sales than any other console franchise worldwide in 2018.
It still kind of boggles me how Call of Duty can generate #1 selling console franchising years and years later.
Black Ops 4 sold through more units than Black Ops 3.
Man, I love Call of Duty up for the first 4 games, but man, after that, just lost interest.
And engagement was strong.
So I guess props to
hours per player
them for knowing what they're doing.
Black Ops 3 as players enjoyed Blackout, multiplayer, and zombies.
Zombies.
We also saw a significant shift to digital.
I love hearing executives talk about like video game stuff.
Representing over 40% of console sell-through versus approximately 30% for World War II. However,
I'm gonna take 1 second break. I gotta go grab something. All right, we're back. Sorry about that. Just realized I didn't have my
in the second half of the quarter were below
handheld computer
due to weaker than expected retail demand, lower than anticipated pricing, and other promotional activities that didn't meet expectations. Although Black Ops 4 in-game net bookings started off slower than expected following the introduction of the new in-game system,
all right, good, that's working.
We were encouraged by the response we saw when we introduced more compelling content with the second season of events in late Q4. Turning to Destiny, the mutual agreement with Bungie to sell back the commercial rights to Destiny and eliminate our ongoing investment in the game did not have a material impact on Activision segment operating income in the quarter. but will free up capital and development resources for the future. We also continue to drive strong performance for the beloved intellectual property from our library, following the successful launch of Spyro in Q4, and the ongoing contribution of Crash Bandicoot, which has sold in over 10 million units since its 2017 release, again highlights the enduring nature of our classic franchises. Overall, Activision delivered meaningful year-over-year growth for segment revenue and for operating income. And with the changes we are implementing in 2019, we expect to drive even stronger performance in the years to come. Blizzard was a more nuanced story in Q4. On the one hand, we grew Q4 segment revenues to $686 million and operating income to $241 million. And Blizzard had 35 million monthly active users in the quarter, as Overwatch and Hearthstone saw sequential stability, and World of Warcraft saw expected declines post the expansion release this summer. On the other hand, the relatively consistent monthly active user trends for Blizzard's communities were not matched by in-game net bookings, which continue to soften. In particular, Overwatch and Hearthstone.
What he just said there was, we didn't make as much money from Blizzard players, even though more of them were playing, because Blizzard gamers in general are like not super down with the microtransactions. Like, this is okay. We're going to take a moment here for me to go on a little bit of a rant about monthly active users and Activision Blizzard's attitude towards World of Warcraft, because all the stuff I've read about this company and their quarterly reports, press releases, etc., they're very focused on increasing the amount of time players spend in World of Warcraft. Now, the reason for this is there's research and studies that show if you have players playing a game more, they're likely to spend more money on things like mounts and pets and various other microtransaction-y things. Okay, cool. However, and this is something I alluded to earlier, World of Warcraft is based on a subscription model, and that subscription model has pretty much carried Blizzard throughout World of Warcraft's existence, as far as the amount of money it actually makes for Blizzard. And subscription doesn't actually matter how long players are in the game. It's all about if they're just subbed or not, and what makes people sub or not, if it's a good game and they want to play it. So, and like, this is nothing new. This is pretty obvious. If World of Warcraft was just a good game that people wanted to play, that's where they'd make the money. They don't need to drive player engagement. They need to make a good game that people want to play and rate.
Both experienced sequential declines in net bookings from players.
I want to ask them that question on their next call next quarter.
Lastly,
I'm going to have to figure out how to do that, but I think it's going to happen.
The success of our business in China and the extension of our partnership with NetEase. Building on our 11-year joint venture, the expanded agreement
That's the Diablo thing.
January 2023 and reflects the substantial value and opportunity for Blizzard's content in China.
So I know that the Diablo Immortal thing is kind of a meme, but I actually kind of agree with Blizzard on that in a sense. My heart goes out to all you Diablo players who got kind of shafted at last BlizzCon when you didn't get a new Diablo. However, I don't think that Blizzard trying to make mobile versions of their game is necessarily a bad thing. And I'll show you the reason why. And it's somewhere in here. Asia, I think. Yeah. So this is net revenues by geographic region, percentage of total, right? So currently 50% of Activision Blizzard's revenue comes from America, NA, 35% from EU, that's what that stands for, and then 17% Asia Pacific, right? So that's China, etc. And there's a big draw for mobile games in Asia Pacific, right? And Blizzard's got only 17% of their revenue is actually coming from that area, which is up from 12% last year. It's a pretty big increase, but yeah, if you're running a big company that's making games and you want to keep making good games, you got to have good revenue streams. And in order to take advantage of that, like if you diversify your stuff, then that's going to give you healthy revenue streams for the long term. There's kind of two factors here working. Activision Blizzard has kind of this like two-factor approach thing. They've got mobile games PC games and console games, which are covered by King, their mobile game publisher. PC games is Blizzard, and then Activision is sort of the console games. Cool. All right, so we got the three major gaming groups covered there. All right, then they also have, America's, NA, and EU, right? So America's is probably more skewed towards consoles. EU is probably more skewed towards PC, but it's probably kind of an even split there. And then Asia Pacific is sort of like the mobile thing. So they've got three main geographic regions. They've got three main gaming platforms, and they all, like, it's all kind of meshing there. But that's the thing, though, right? Like, Asia Pacific and their mobile gaming stuff is lagging a little bit behind. So it makes sense for them to want to make more good mobile games. And they contracted a big, I think NetEase, something like that, is the sort of the mobile game publisher they've kind of contracted for the Asia Pacific segment and making like Diablo Immortal and things like that. So I don't necessarily disagree with Blizzard on the focus on mobile games. I don't think the criticism that focusing on mobile games is going to take away from development of their other established franchises is really valid, but only time will tell. Anyway, that's my
While the
little
majority
analysis
of the economics from
on
our
that.
renewed arrangement will be recognized over
So
the
I
next
keep launching into
4
all these
years,
tangents.
Q4 did benefit from the agreement, which was contemplated in our outlook. Now, I'll go into more detail in a minute, but
Okay.
increasing the flow and the frequency of compelling in-game content and upfront releases to serve the needs of our players is the #1 goal set by the new Blizzard leadership team going forward. Finally,
All right.
King grew segment revenue and operating income year over year as it continued to recover.
Sounds great as
from the
a
network incident
investor, but
experienced in
as
the
a
second
player,
quarter.
I don't know so much.
Q4 segment revenues grew 5% year over year to $543 million, and operating income increased 28% year over year to $207 million. King monthly active users of 268 million grew sequentially for the first time since we acquired the business in Q1 2016, driven by the successful launch of Candy Crush Friends in October.
Candy Crush
Friends is seeing strong monetization and retention trends, contributing incremental growth for the Candy Crush franchise,
This was a good
which
purchase.
overall grew net bookings and monthly active users both quarter over quarter and year over year.
2016, I believe, is when they
This
got it.
encouraging performance sets the foundation for King to ramp its marketing support and drive
February
further growth
2016.
for Friends in 2019.
3 years ago. Almost to the
Now,
day.
importantly, our advertising initiative continued to gain momentum, growing net bookings over 50% sequentially and again profitably as the team continues to execute against a sizable opportunity. Now, taking a step back and looking at our full year results for 2018, we delivered record GAAP revenue, GAAP and non-GAAP EPS, and net bookings. We continue to make encouraging progress in mobile, advertising, and esports. However, in-game execution was inadequate for some of our franchises, and we saw weaker than anticipated retail demand. As you will hear from Dennis, our 2019 outlook assumes that we will not improve in-game monetization as quickly as we would like, and that it is a transition year where we have less new major content to release than we should.
That's interesting. They're anticipating that 2019 means less microtransactions.
So, we have worked with our new business unit leaders to undertake a comprehensive examination of our business to determine the changes we need to make to improve execution and capitalize on the substantial long-term growth opportunities for our company. We've determined that we need to refocus our best resources on our biggest opportunities and to remove an unnecessary level of complexity and duplication that is built up in certain parts of the business. We have therefore developed a clear plan for this year to refocus and reinforce the foundation for growth. This refocus.
To me, what that sort of sounds like, and this, goes back to the layoffs, is they're going to consolidate support, customer service, marketing. Because it sounds like previously, sort of each studio probably had its own stuff, right? Its own marketing team, its own thing. So now they're gonna make everyone know everything, which, yes, I mean, that sounds great on paper and to investors because it's saving on costs, obviously. But I don't know. What if the King support people don't know what Call of Duty is? I don't know. That's a serious concern. The slight encouraging part about that is if they're also kind of refocusing their development efforts and resources on only the major titles they have. This 20% increase in development resources down here towards things like WoW, Diablo, Overwatch, Call of Duty, then maybe it'll make it easier for the support team. I don't know. Sounds hard to say.
It includes initiatives developed by our new business unit leaders, each of whom has demonstrated the ability to combine creative excellence with a commercial focus on profitable growth. First, we are investing more in development for our biggest internally owned franchises across upfront releases, in-game content, mobile, and geographic expansion. Second, we are deprioritizing initiatives that are not meeting our expectations.
Yep,
and
no more
reducing
HOTS.
certain
No more HOTS
non-development
esports.
and administrative-related costs across our business. Third, we are integrating our global and regional sales and go-to-market partnerships and sponsorships capabilities across the business, enabling us to better leverage talent, expertise, and scale on behalf of our business units. Our restructuring plan sheds investment in less productive, non-strategic areas of our business and will result in a net headcount reduction of approximately 8%, while also driving a significant increase in investment, focus, and capabilities around.
I just want to point something out. This has no kind of emotional thing charged to it whatsoever, but historically, if you look at companies that have done layoffs on this kind of a scale, it results in their stock price increasing. One example is Seagate Technology, makes hard drives, one of the two big hard drive manufacturers. It was 3 or 4 years ago now. They had a big old round of layoffs, and their stock price went up because that's what happens. When you pay people less, you have more money to make for the business.
Our biggest franchises. We're confident that over time this plan will enable our teams to accelerate the delivery of high-quality content to our communities. Specifically, as we reallocate resources and hire new talent, we are planning for the number of developers working on Call of Duty, Candy, Overwatch, Warcraft, Hearthstone, and Diablo to increase in aggregate by approximately 20% over the course of the coming year.
It's come as no surprise that Blizzard has a majority of the high-quality game franchises at this company.
And accelerate its expansion across platforms and geographies. We also intend to build on our experience with the Overwatch League to launch a professional, city-based Call of Duty league that drives franchise engagement and represents a sizable incremental economic opportunity. We are also increasing coordination across our Call of Duty studios.
I don't know,
unified development leadership and more unified tools and
personally couldn't give a crap.
Consistent user
Maybe Call of Duty's really that big a deal. I mean, right, it was what, #1 selling franchise or something
Candy,
this year?
King Management will increase its focus on growing reach and monetization with in-game content, features, and events with a substantial increase in Candy development resources. The advertising business will continue to add engineering and direct sales resources to support our plans for strong revenue and operating income growth in 2019 and beyond. The Overwatch team is also growing, as it focuses on delivering a significant content pipeline in the coming years. And the Overwatch League remains a key strategic focus, where we will grow the number of resources involved to drive an expanded product and year-on-year revenue growth. World of Warcraft is an example of a franchise where Blizzard has already established a regular cadence of major content and in-game operations. Additionally, Blizzard is investing in other Warcraft games, working on more ways for the community to engage with its enduring and beloved franchise. For Hearthstone, additional development resources will help to release content that is both broader and deeper, and to optimize the game to deliver an even better mobile experience for its global audience. And Diablo's development headcount will grow substantially as the teams work on several projects underway for the franchise, as well as the global launch of Diablo Immortal. Overall,
Diablo Immortal, yeah,
reinforcing its pipeline with more resources than ever before to support planned mobile titles, several PC and console releases, and WoW's continued cadence of content. Finally, as a company, we will continue to invest in breakthrough new ideas and incubation with focused resources and some of our best creative talent. With 2019 set to be a quieter year for upfront launches, now is the right time to implement this plan. Work is already underway across the company as we speak.
So because they're not expecting big releases in the next year, they're going to focus on making esports a driver of revenue. That seems like solid business sense, but I don't know. Like I said, last good esport that Activision Blizzard had was StarCraft 2.
We expect to have completed the North American components of our plan by the end of Q1, with implementation of the international components by end of year. And we have already started to increase developer resources on our biggest franchises and will be aggressively hiring talent in the coming quarters. As we look forward to the coming years, we plan for all of our major franchises to be operating at scale and capitalizing on opportunities that include robust ongoing live operations and regular content launches, both large and small, strong mobile experiences available for all of their communities to enjoy, new engagement and monetization models, including where appropriate esports and advertising. And underpinning all our franchises will be our deep relationships with growing and vibrant communities, which are increasingly direct and digital.
All right, so just real quick on Call of Duty numbers, right? Like if you're getting 150K viewers for the big event, I'm assuming Worlds 18 is the biggest event. I mean, that's probably sustainable enough to make money off of, right? Like, it's not going to be the next Fortnite. It's not going to be the next, League of Legends Worlds. But hey, it's probably good enough to be invested in. So, all right.
In short, we are refocusing the entire company to return to the franchise focus that has fueled our long-term success and to better leverage the scale of our business for future growth. I'll now turn the call over to Dennis to provide our outlook for 2019. Dennis?
Thanks, Scotty. Before I discuss the 2019 and Q1 outlook, I just wanted to take a moment to say how excited I am to be back and to return to a more day-to-day operational position as the CFO, as well as a leader of our emerging businesses. We have a tremendous team, and although we have a lot of work at...
So they're expecting... Decreased revenues and 715 revenues, which is, oops, that's not what I wanted to select. Oh my gosh, okay. Line, you just stay right there.
In front of us, I see a stronger pipeline and more opportunities for long-term growth than ever before. As Bobby and Cody mentioned, 2019 will be a transition year for us as we implement change to enable our teams to create better content for our biggest franchises more quickly.
Up.
Given limited frontline releases,
probably a good sign.
The organizational work underway, and the current competitive environment, we are planning for this year to be down year over year.
Hashtag politics.
I'll first go through the segments, including Slate, to provide some context for the outlook, starting with Activision. The main driver for the segment will be the Call of Duty franchise. Heading into 2019, we have momentum to build on given the launch of Black Ops 4, with the franchise yet again #1 globally in upfront sales in 2018. We will continue to optimize in-game content this year to drive ongoing engagement and player investment. And in Q4, we will have another major launch for the franchise that will appeal broadly to both existing and new fans with what I can only describe now as a great step forward in the franchise that is also rooted in some of the franchise's most important history.
Color me skeptical, but I don't think there's really anything left that's surprising they can do with Call of Duty. Although, if they go back to actual original Call of Duty, then maybe. That would be pretty cool. I was watching some original Call of Duty videos the other day. Some good nostalgia there.
We have high expectations for the game, but for modeling purposes, we are conservatively planning on upfront Q4 unit sales to be lower than Black Ops 4. We will also bring Call of Duty to mobile with our partner Tencent, although as you would expect, we take a conservative approach in assuming no material operating income from this initiative this year.
All right, real talk. I've played a decent amount of PUBG Mobile, and that game is freaking sweet, okay? So I have high expectations for this Call of Duty mobile game.
Outside of Call of Duty, we will release Sekiro in Q1, and our strategy of reimagining classic franchises will continue with Crash Team Racing on multiple platforms later this year.
Bring back the
Crash
Team Racing? I don't know about that one.
In 2019, following the sale of publishing rights to Bungie. Excluding Destiny in both years, our outlook is roughly flat for net bookings for the rest of the Activision segment in 2019. Turning to Blizzard, we expect materially lower financial performance this year. 2018 benefited from the release of World of Warcraft, Battle for Azeroth, whereas we are not planning a major frontline release for Blizzard in 2019.
Hello,
And
Classic World of
Blizzard
Warcraft?
exited 28 with
That's
softness
pretty
for
major.
in-game revenues that will take time to stabilize and return to growth. While these factors will weigh on Blizzard's financials this year, looking further ahead, Blizzard's pipeline
memeing,
of
of course.
console and mobile content
Classic
is
is
richer
going
than
to generate
ever,
a bunch of
and we
revenue,
expect a
like
significant addition of
an expansion
development
release will.
resources to accelerate the pace of delivery over time. Finally, King is entering 2019 with momentum as it continues to recover from the network incidents it experienced in Q2. The business will continue to face tougher comps in the first few months of the year until it crosses the anniversary of this disruption. Nonetheless, we expect segment revenue to grow modestly year over year, driven by growth for the Candy franchise and the continued ramp of our advertising business. Bringing all this together to the total company level, our outlook incorporates net bookings declining 13% year over year. The Blizzard segment represents the majority of this year-over-year change, given its 2019 release slate and in-game performance. The lower net bookings from Destiny is also a factor. The lower net bookings performance translates into lower segment operating income, and our outlook assumes a high teens year-over-year decline. Again, the Blizzard segment drives the majority of this change. Activision segment operating income is also expected to be lower due to the following factors. First, we are planning to invest more in Call of Duty this year, including to support platform and geographic expansion. And second, we will not generate meaningful operating income from Destiny this year. Although I would note that this is consistent with our planning assumptions were we to have continued publishing the game. King segment operating income is planned to be roughly flat as we invest in Candy marketing to build on the encouraging start for Candy Friends.
Candy marketing.
Finally, I would note that we are planning for a higher tax rate this year. While our 2018 GAAP tax rate included one-time benefits from U.S. tax reform and our IRS settlement, both our GAAP and non-GAAP 2019 rates incorporate the full impact of new international tax provisions.
That's 2013.
With that context, I'll detail the financial guidance for 2019 and Q1.
I've never seen these before.
On a GAAP basis for 2019, we expect revenues of $6.03 billion, including GAAP deferrals of $275 million. We expect net bookings of $6.3 billion. Product costs, game operations, and distribution expenses of 24%. Operating expenses, including software amortization, of 56%. And a GAAP-only charge of approximately $150 million relating to the restructuring plan Coddy outlined. We expect GAAP and non-GAAP net interest expense of
restructuring
0,
plan.
a GAAP tax rate of 24%, GAAP and non-GAAP share count of 775 million, and EPS
What's
of
up, Noah?
$1.18.
What did you
For
miss?
2019 on a non-GAAP basis,
I ranted a little bit, and then I ranted some more. I do a lot of ranting.
Distribution expenses of 24%, and operating expenses including software.
Yeah, we're just going through Activision Blizzard Q4 earnings call. This is all nothing too crazy major, but you know it's important to keep your models updated if you want to stay up to date and current with stuff.
Of 46%.
And listening to what the company has to say about itself is always good information.
And non-GAAP EPS of $1.85, which includes GAAP deferrals of 25 cents. For Q1, on a GAAP basis, we expect revenues of $1.72 billion, which includes the recognition of GAAP deferrals of $540 million.
Awesome, that'd be fun. We
We
might learn
expect
something.
net bookings
We might
of
both learn something.
$1.18 billion. Product costs, game operations, and distribution expenses of 20%. Operating expenses, including software amortization, of 57%. And we expect approximately $100 million of the GAAP-only restructuring charge to be booked in Q1. We expect GAAP and non-GAAP net interest expense of 0, a GAAP tax rate of 24%, GAAP and non-GAAP share count of 772 million, and EPS of 39 cents. And for Q1 on a non-GAAP basis, we expect product costs, game operations, and
This is like
distribution
0.89 if I'm not
expenses of
mistaken.
20%, and operating expenses, including software amortization, of 43%. We expect a non-GAAP tax rate of 22% and non-GAAP EPS of 63 cents, which includes the recognition of GAAP deferrals of 43 cents. Turning to capital allocation, I wanted to spend a moment to quickly review our historical track record just as context. As most of you know, we have always taken a disciplined and balanced approach to capital allocation.
That's good.
We view a strong balance sheet as a strategic asset, and while our focus in recent years has been on paying down debt, with over $4 billion repaid in the last 5 years, we've also returned almost $11 billion to our shareholders over the last decade, with around $2 billion in dividends and $9 billion in share repurchases.
You know, companies get railed a lot for, doing things for their shareholders, like doing stock buybacks and dividends. But hearing that right after, they're talking about how they're not being reckless with their loans and actually, trying to keep up on their debt. I don't know. It's always really encouraging to hear that when a company has a level head when it comes to debt and credit and such stuff like that. Because debt is a very important tool that you need to leverage if you're going to be a company in, what is Blizzard, $35 billion company? Yeah, something like that. You're obviously going to need to know how to use your resources. And yeah, this is good. It's good stuff.
With this balanced approach in mind, our board has authorized the following: a 9% increase in our dividend to 37 cents per share, payable in May.
People are kind of up in arms about this.
And also a new 2-year, $1.5 billion share repurchase authorization. Before I conclude, I wanted to summarize the company's position heading into 2019. We continue to have a tremendous potential in front of us. Our combination of leading owned franchises, a direct digital connection to our consumers, best-in-class developer talent, and geographic, platform, and business model diversity creates a powerful foundation for longer-term growth. We must, and will, relentlessly focus on the world-class execution, business excellence, and quality content delivery that has been the backbone of our company and business for many years.
He's got a great point, You got a lot of really good brands at Activision Blizzard, and if there's one thing that's been proven over and over again is despite what might happen to a brand, what might happen to a company that owns a brand, there's always going to be people that persevere and, have fierce brand loyalty.
Our plan to increase our focus on our core franchises is consistent with that approach, and I am confident that executing against our plan will position us to deliver strong results and shareholder value over the long term. Looking ahead, I look forward to updating you on our results as we make progress throughout this year. Now I welcome our business leaders, Ricardo, Humam, Rob, and Jay, as they join us for the Q&A portion of the call.
All right, with the Q&A transition, we're going to take a quick bathroom/coffee break. We'll be back in just a minute. Wait, that's... sure. All right, we get to use this old be right back screen. We'll be right back, folks. We're back. Uh-oh.
Operator?
I did want to say one thing before we get into the Q&A. Obviously, the remarks up until this point are all being made by people from the company. So they're going to paint it in a very positive light. Now that we get to go to the Q&A, this is where we sort of, if there is any kind of a dissenting opinion, some of them might start to show through. So it's usually the more exciting part of the call. And plus, you never know when you might be listening to a conference call and a meme might be born because there was some like oil and gas exploration conference call where the dude was just like calling people out and telling them they're stupid or something. And I think Elon Musk has made some pretty colorful comments on conference calls before. So the stuff's usually pretty dry, but every once in a while you get a gem. But pretty sure we won't have anything that crazy in this one.
Thank you. If you'd like to ask a question, please signal by pressing star 1 on your telephone keypad.
I'm going to do this
If you're
next time.
using a speakerphone,
Ask them about
please
subs
make sure your
and
mute
monthly
function
active
is
users
turned
and
off
stuff.
to allow your signal to reach our equipment. Again, press star 1 to ask a question. We'll go first to Colin Sebastian with Robert W. Baird.
Oh, great. Thanks for taking my question, and welcome back, Dennis. I appreciate the comments on the restructuring and hoping you could provide a little more color on the reallocation of resources.
Analysts love saying color.
Discuss how and when we can expect that effort to translate to a return to growth. Thanks.
Sure. Thanks, Colin. This is Cody.
It's a very insensitive way of saying, how is firing people? When are we going to see the return on you firing a bunch of people?
Yeah, I'll take that one.
It's
I
business.
guess stepping back, as we shared during the call, our plan is focused on delivering growth in reach, engagement, and player investment. And there's really big 3 areas of it. One is refocusing on our own franchises, where we feel like we have the highest opportunity for growth. 2 is making sure we have the right amount of development resources to then go deliver great content within those franchises to our player communities.
All right, Bobby,
And then
you're not answering the question.
Benefiting from company scale and removing duplication and inefficiency. And so to do this with the new leadership teams, there's 3 specific and important changes, as we head into 2019 that we plan to deliver. The first is investing in development on our main franchises.
Yeah, you're just repeating yourself. Come on.
20% increase.
Give us a timeline.
To drive the content and cadence and pace.
When are we going to get our money, Bobby?
Second is reducing and eliminating initiatives that are not meeting our expectations, and also areas where we can find duplication and remove it. And then third, integrating our global and regional sales and go-to-market and partnerships and sponsorships so we can leverage scale. We know we have a global and fan player base that is looking for content on a regular cadence to come more quickly and to come across multiple platforms. And we think we have set up each of our operating divisions to be able to deliver on that. But we also think we've better set up the company.
Look, the constant theme with Blizzard games over its entire course of existence has been quality over quantity, and in this case, quality being really, really, really good video games, and quantity meaning like pace at which they're released. The whole soon TM thing for Blizzard, like that's a meme, but that's also a core foundation of Blizzard video games. And basically, what Bobby just said there is that they're not doing soon TM anymore.
To be able to deliver on that as we leverage those areas where scale can really help to bring our content and our franchises.
I should write that down.
As for timing, and as we see those effects, we're only guiding to 2019 today. But what I can say is that we are confident in the growth opportunity ahead of us. Our increased focus, our investment, leaning into our big franchises is a sign that we are headed towards a place where growth, given the right resources, given the right plan, can be realized.
Operator, can we have the next question, please?
All right, you didn't answer the question, Bobby. You wanted to know when he was getting his money. You did not answer that question.
From Evan Wingren.
That said, it's impossible to predict the future, so tough question, to be fair. But you didn't even try to answer
I was wondering if you could provide us a bit more commentary on the components of your guidance for fiscal 19, how you see your franchises performing, and how you see the seasonality of the year unfolding.
Yeah, thanks, Evan. It's Dennis here. Happy to provide some color on that.
What kind of question is that?
Kind of helicoptering up a little bit. There are a few things to think about as it relates to
It's going to do this.
Outlook.
It's going to go up in Q4, and it's going to go down over the middle of the year.
Our release slate, which is diminishing.
They don't have releases coming next year, so there's not going to be as much. I don't know, like
impact our outlook.
Not a good question.
In addition, the in-game softness that we saw exiting 18 caused
what
us
is
to enter the
in-game
year at a
softness?
slightly lower trajectory than last year. And although we have a plan to turn that around, it's going to take some time, and so we don't actually assume a full recovery of that in 2019. And then we also are pretty conservative in terms of how we plan for some of the newer things in our pipeline, like our mobile games.
You mentioned that.
We do
conservative estimations.
Shoot for breakout hits, but it's very hard to obviously prudently plan for those in your outlook. So
it's a very telling statement that he would say, obviously we shoot for breakout hits. That's like saying that I shoot to make viral videos about World of Warcraft gold making. Like that's not how it works. You make good quality content that you would care about yourself, and then if it's good and it resonates with the people, then the people make it resonate. But you don't. Having that attitude is, I don't think that's right.
We're obviously more conservative on that. And then the last piece I would just say is relative to our tax rate. You heard a few of the comments about it being up because of some of our international considerations this year. So those are the main considerations.
That's good to know.
I guess just
tax rate up because of international
outlook.
stuff.
As it relates
I
to
just assumed it was because they were going to make more money. But
given the limited number of product launches this year, Q4 will again be a very important quarter. Again, we try to take a prudent approach relative to that, assuming that Call of Duty units are down year over year in our outlook. I would say that the team that's building this new game for us in Activision is building what they believe is the best Call of Duty we've ever built. And so that team.
How many times have they said that?
Even though we haven't put it in our outlook in that fashion.
Oh, welcome back now.
So I guess.
Did you also get some coffee in a bathroom break?
Our approach relative to guidance and my approach to guidance.
This question was they wanted to. The guy wants to know more about next year's outlook on revenue and stuff, which is just a terrible question, right? Like they already said it. He wanted more commentary. Like what commentary? My apologies for your ears. I don't have this thing very well secured. Yeah, it is a bad question. It's just
really,
more
for this year,
nonsense.
Really consistent with how we've set guidance in the past, and a careful.
Analysts ask CEO to predict the future. CEO says exactly what he just said. You can't predict the future. So just everyone in this situation, this is a pointless question.
We'll now take a question from Ray Stochel with Consumer Edge Research.
Great. Thanks so much for taking my question. This is for Rob. Can you quickly tell us about how you are thinking about leading Activision, and then give us an update on the Call of Duty Black Ops 4 launch and how that game is trending so far? Thanks.
Hey, thanks for the question, Ray. So I've been at Activision for about 15 years now, and I've touched just nearly every part of the business. And what I really look forward to is taking all those experiences and applying it in this broader capacity. At a high level, I'm really focused on two things right now. It's our players and our people. Very simply.
Just real quick, this question does actually have a lot of potential to be very interesting because, as I said before, the leadership in a company is really, really, really important. If not, I would argue that it's actually probably the most important thing, especially for a company of this size that's been established for so long, right? Like the brand is there. But if you have good leadership, that's what really takes you to the next level. And I don't know, maybe this guy will say something interesting.
I'm very committed to our players and over-delivering on their expectations. That is just something we must do. Now, behind it all is our people.
Response.
They're world-class. They are our foundation.
Yep,
we want to continue to invest in them and to create an environment for them to do their best work. Now, if I step back from an Activision perspective and look at the business, we do have a lot of opportunities right in front of us in mobile, in PC expansion, in geographic expansion, especially in Asia.
I did talk about mobile a little bit earlier. I don't think it's a bad thing.
Already. And of course, in business models that continue to arise in our industry and create opportunity for us. And as a division, we have specific initiatives against each of these in progress that we're excited about.
I have not stayed hydrated. I've done the opposite of hydrate. I've been drinking coffee.
It delivered better unit sell-through than Black Ops 3 in its launch quarter. So what we have is a really strong foundation of players right now, and our biggest objective is
now he's talking about Black Ops
engagement with our community. Now, the good news is we have our best in-game content coming still. Our next event on February 19th will be what we believe is our biggest and best in-game event. And it's going to have significant
updates
across all modes. And we're looking forward to see how that lands and resonates with the community. And then if I look even further ahead to what Dennis mentioned, it's worth mentioning again, this fall's launch, I think, is going to resonate very powerfully with our community.
It's got more than old school RuneScape.
It's going to feature an entirely new campaign, a huge and expansive multiplayer world, and of course some fun co-op gameplay. But from day one, what gets me really excited is every time we've shown this title internally,
Must be
it's
an
just created a
event
ton
going
of
on.
buzz. Now, I wish I could tell you a lot more right now, but unfortunately, you're going to have to wait. But I think it's going to be really worth it. We can't wait to share it.
They're sort of hyping up whatever the new Call of
thank
Duty
you for
they've
the
got
question,
going
Ryan.
on, which is,
And I would just add, right, Bobby, that
yeah, I guess that's cool.
that when you look
It's another
over
Call of
the
Duty
last
game.
decade of Call of Duty
It'll
content,
generate sales.
I think that Rob is underselling what the internal enthusiasm is. I haven't seen this much enthusiasm that I can remember almost ever.
Okay.
So we're excited about the fall release of Call of Duty content.
I mean, that doesn't really mean much, but
Great, thanks again for taking my question.
I guess it's good. The people who are making the
Our
game are
next
excited about the
question will
game.
come
That's
from
never a
Brian
bad thing.
Nowak with Morgan Stanley.
Thanks for taking my question. One for probably Jay. I guess the question, Jay, is what
Jay's
what
the
is
king
what is
guy.
the new management team doing just to make sure that Blizzard is back on track, executing as one of the top studios as it should be? Thanks.
I'm an idiot. Jay Allen Brack, of course.
Yeah, thanks for the question. I think one of the things that I feel like it's important for us to talk about is, we're a bit of a new leadership team.
Okay.
And, as we've come together, it's clear that, we believe a lot in our future and that we have a lot to prove.
Come on, Jay, you're better
from
than
a
that.
game and kind of a content delivery standpoint. I think we have a huge amount of opportunity. We have fantastic IPs. We have
Come on, Jay, you're better than
that we
this.
want to create, and we have a very passionate community that is hungry for all of the things that we can kind of produce. So we have two big goals going forward.
All of the things?
And the first one is, of course, to, make excellent video games. The second is to, find ways to
Is this what he's talking
deliver
about?
more content to our player communities. To meet these goals, we need
Jay,
to work
Jay,
to
Jay,
increase
Jay.
the amount of content that we're delivering. Right now, we have the largest lineup of PC, console, and mobile games that we've ever had. And we're working to meaningfully increase the development capacity and the development headcount.
All right, that's a little bit conflicting with what Bobby's been talking about. Their whole idea with, laying 8% of their workforce off is to refocus their efforts on the core games. And now, Jay, you're talking about having the most games you've ever had. Come on, man. What's the deal here? Pick a side.
That investment in development talent has really required us to make some difficult trade-offs. We're going to, as Cody mentioned, we're going to reduce our non-development positions in our offices around the world, specifically looking at our SG&A and non-core business units. This was a very, very difficult decision. I'd say it's a top 5 career difficult kind of moment for me personally.
Top 5 most difficult decisions Blizzard's ever made.
Everything that we can to help get us into a good position going
They're bringing
forward.
clickbait into
We
conference
really want
calls.
to serve our players and we want to serve our communities in the best possible ways and be a great creative organization. As difficult as kind of all this is, I think, we're happy about the things that we're working on. We're working very hard to kind of live up to our mission. And, we really look forward to the community and you all seeing the results of this increased development work over time.
I'll just say it's really terrific for the company to have Jay's leadership. He's humble about his experiences. When you think about World of Warcraft and Hearthstone and the Warcraft franchise, it's been one of the most successfully led franchises in all of video games, and we couldn't be happier to have Jay in the role that he's in.
Great, thanks.
We'll now take a question from Alexia Quadrani with JP Morgan.
You can't see what I just typed there, but I wrote a question
Thank you very much.
to add to next, to potentially ask Blizzard. I don't know if this will ever get happen, but how do you reconcile cutting 8% of your workforce with record level quarterly earnings?
I guess my question is, given one of your competitors' decision to launch a free-to-play battle royale game, are you rethinking the monetization model for any of your own
Gotta
games?
get on that VR game, bruh.
Sure, this is Cody. Thanks for the question.
I do want to point something out. Blizzard has been very staunchly adamant, and I realize as I'm saying this, that this is totally not even true, about always charging for their games. I guess you look at HOTS, you look at Hearthstone, and that's totally not even the case. So when somebody comes in and asks a question about can we have a free BR from Blizzard or Activision, I don't know, this might be an interesting answer.
I guess maybe a couple of key points. First, stepping back, one of the things that sometimes gets lost in the discussion around economic models is the player and game experience itself. Our North Star is to deliver compelling and engaging.
That's actually encouraging of him to say.
Without that, there are no...
Hold on, I'm going to rewind this because I got to write this down. 3815.
I guess maybe a couple of key points. First, stepping back, one of the things that sometimes gets lost in the discussion around economic models is the player and game experience itself. Our North Star is to deliver compelling and engaging gameplay.
I'm tweeting that. That's some controversy right there. What is this? Oh, come on. Really? That's actually very interesting. Oh my gosh. Come on, Excel. Why you gotta be that way? That is straight up. Look. I don't know, man.
Full stop. Without that, there are no economics. The second point is that the economic model has to work with the franchise and the community and the gameplay. They need to work to reinforce each other. And we feel like we're in a pretty unique position, honestly, across the industry in that we have multiple business models running at scale across our franchises today. We have free-to-play games, microtransaction-based games, games with an upfront charge or with a subscription. And we also now have advertising, which is growing as well.
Sorry, real quick, I wanted to actually build on this because I realized, right, so I talked about Blizzard's regional diversity, Activision Blizzard regional diversity, their gaming platform diversity. Now, Bobby actually brings up a good point that I hadn't thought about. They have sales model diversity, right? Like free-to-play, pay upfront, subscription models. So, yeah, that's good. I like hearing that.
And we think that provides a range of options for our product and development teams to look across and pair the best economic model with the best gameplay experience.
Yeah.
One thing we know, though, is that we need to be able to move more quickly, and we need to be able to rapidly evolve.
Every big company
with the demands of our players and the market. And that's why, as I mentioned, we are investing significant development resources in our core franchises to be able to move more quickly on behalf of our players and to be able to take advantage of new business models. And on the free-to-play part of your question in particular, obviously the most proven platform is mobile. So as we increasingly bring Activision and Blizzard IP into the mobile space, you will see us deploy more free-to-play models. Embedded in your question, though, is also the fact that we see competitors now on PC and console going free-to-play. And I just emphasize again that we believe our investment in resources, coupled with our strong IP, leaves us in a really good position to take advantage of evolving business models in our industry. The last thing I'd say, and it's just worth mentioning, is that the success we see with titles like Call of Duty or even recent competitive launches shows that a really well-built, well-polished AAA experience for players can come still with an upfront charge, and it can be a great player experience and a great business.
Yeah, but you actually got to deliver that AAA experience, Bobby.
Looking ahead, we'll continue to evaluate all our games across our franchises and use the models that we think best, both for the player experience and for our business.
Thank you very much.
Our next question will come from Mike Hickey with Benchmark.
That was a really good question.
Hey guys, thanks for taking my questions. Just focusing on your King segment, I was hopeful you could provide some more color on your Candy Friends launch. I guess how it went from.
This is good. I'm actually really curious about King
now.
And then all their Candy Crush nonsense. So real quick, and this is why I'm really interested just because I want to give some context on why my interest is there. If you look at Activision Blizzard's monthly active users, which I have laid out here at the top of my model, you'll notice that Activision and Blizzard, so Call of Duty and Warcraft and Overwatch and such, account for about 50 million active users per month. Or is that per? Yeah, it's per month each. Then you look at freaking King, and you're like, yo, what the heck? Who's carrying this number, right? It's the mobile game, right? So and obviously there's probably a ton of factors that go into that, but yeah, that always strikes me as really like a huge, massive difference. So I'm always curious to hear about the mobile game and how that's being monetized, because like these numbers are obviously decreasing, but still really high. So let's hear what he has to say.
Here. Thanks for the question. So Candy Crush Friends launched in October. It's been a great addition to the franchise. The game has really got a lot of great new game modes and mechanics, and we really think it's our most polished title ever. And it's brought a lot of the franchise characters to life like never before. What I would say is that after many years of the teams operating the Candy franchise at scale, they've really poured all their learnings into the Candy Friends experience. And what we're seeing is that that's paid off. It's really showing some strong retention, and the game's per-player monetization metrics are well ahead of where the franchise's other titles were at a similar point post-launch.
That's good.
And again, it really reiterates and demonstrates how kind of the years of experience operating Candy were funneled into the Candy Friends title. Great start, and we have more plans in 2019. The way I think about it is we're still in launch mode with Candy Friends, and this is the year where we make marketing investments to support the title. And while we're doing that, the teams have some really strong plans to drive engagement and monetization trends with some proven features in the pipeline to continue to delight the players. So overall, very pleased with the momentum. And I expect that the game will
pretty sure this guy is European.
Help drive
I think that's what King is.
Franchise growth in 2019.
Thank you.
We'll take our next question
that wasn't
from
really
Tim
much,
O'Shea with Jefferies.
I don't know. I guess Candy Crush is doing all right.
Yes, thank you for taking my question. So with Overwatch League Season 2 launching soon, I just thought it made sense for an update on that franchise. It's been over 2 years since the game launched, and we've talked on prior calls and again on this call about the lower revenue levels. So I'm wondering what's the strategy to address this issue, and does Blizzard have the development capacity to deliver sufficient levels of new content into this franchise?
This guy just asked, yo, why aren't you selling more hats in Overwatch?
Thank you.
Thanks for the question. This is Jay. I think it's important to mention the job the team has done with Overwatch. We feel really strong about the overall IP, the universe, the characters, and the story potential,
great game,
along with the global appeal for the game. And we really built Overwatch League around that with early good results. Delivery of more content in Overwatch is something that's really important and something that we're focused on. The team is delivering new heroes and new maps and new experiences. And as you mentioned, the game revenue has declined recently. I think the community engagement with the game remains strong. There are a lot of new ideas for the Overwatch franchise. We feel like the Overwatch that is just a small part of what we can imagine for the overall franchise. And
well, obviously, the game was originally developed to be like an entirely new MMO.
The team has, a very clear plan. In order to deliver on that, we're going to increase the size of the Overwatch team meaningfully. But keep in mind that we're going to need to balance the existing live content with new products and different kind of support for Overwatch League. I'm really confident that the community will be very excited when we kind of release the things that we're working on. Regarding Overwatch League specifically, we saw a great community response and lots of early success. That took a lot of focus, but overall we think it's the right decision. It's been the right decision for the game and for the franchise. We're about to kick off the second season, and that's going to start on February 14th. That'll introduce 8 new city teams. It will introduce home and away
8
matches for some teams for the very first time.
That's a lot of teams.
And the
It's
first
like a whole other league.
match that's actually going to kick off is going to be a repeat of the grand finals between London and Philadelphia. So,
Do you know how many people on this call actually cared about that? Like probably 2, maybe 2.
OverwatchLeague.com is where you can see that.
Because that's probably a lot, because there's a bunch of streamers watching this, so maybe
Operator,
maybe
can
the
we have
numbers
the
are
next
higher.
question, please?
I mean, like the
We'll
actual
take our next
analysts actually
question
that
from
use the
Brandon
phone to
Ross
call in.
with BTIG.
Hi, thanks for taking the question. I was just hoping you could provide a little more color on your rationale for parting ways with Bungie and the Destiny franchise and kind of what happened with that game. Thanks.
Sure. Thanks, Brandon. This is Cody. I guess let me say first that we're confident that this was the right decision for both parties. Bungie gets to focus on the IP that they created, and we get to focus on our biggest opportunities, on our biggest franchises with our best resources. Our decision was reached via mutual agreement with Bungie to sell back the commercial rights. And for us, at least, it was rooted
No animosity.
really in
Always
our
good.
strategy overall. First, as you know, we didn't own the underlying Destiny IP, and we do for all our other major franchises, which we think is not just a differentiator for us in the industry, but also controlling the underlying IP gives us
It's like the In-N-Out Burger model.
move in with new
Own the property.
experiences and new engagement models, which also come with new revenue streams, and of course structurally higher economics when you own the IP. And that leads to probably the second factor in our decision process, which is Destiny. It is highly critically acclaimed, high quality content,
Is
but
it though?
is not meeting our
I've
financial
never actually played the game, so I don't know.
As we went through at the end of the year our financial planning for 2019, it indicated that Destiny would not have been a material contributor in operating income to our business. And third,
Yeah, it's not that
we
popular.
had internal resources supplementing Bungie's work. And that means they're tying up one of our scarcest resources, which is developer talent, which now under the arrangement we've reached will be freed
That's
up
sort of their
after a
whole
short
point
transition
is
period.
redistributing
So late last year, when
resources
we were exploring all our
to the big
options on
stuff.
Destiny, in November after our earnings release, we learned that Bungie was willing to acquire our rights, and we engaged in discussions with them, and ultimately wound up consummating the deal in late December. And it was
Yeah, you
a
consummate
mutual
that deal, Bobby.
amicable agreement. And I just emphasize, I really do think for both parties this is the right path forward, and it allows us to go implement the plan that we talked about today.
Thank you.
Operator, can we have the next question, please?
We'll take our next question from Matthew Thornton with SunTrust.
Looks like this will probably be
Hey, good
last,
afternoon,
not one
everybody.
of the last.
Thanks for taking the question. Maybe you could just update us on just timing around some of the mobile initiatives at both Blizzard and Activision,
Here we go.
including China as well as the rest of the world. Any updated color there would be helpful. Thanks, everyone.
Sure. Thanks, Matt, for the question. This is Cody again. As you heard in our prepared remarks, mobile is a top priority for us, and we think it's one of our largest opportunities, particularly with our global IP, which we think is really well
I agree with
positioned to bring to the mobile platform. We see this every day with King, where you have a franchise at scale globally, but we also see it with other great franchise IP like Hearthstone, where bringing that game to mobile brought in tens of millions of new players that are engaging in an ongoing and deep way with us.
I never would have played Hearthstone if it wasn't on mobile.
The thing to note is mobile game teams, while smaller than PC or console, they still require time to prototype and to test. And
Why are they
particularly for
smaller? They
us
should
in our
probably be
franchises,
more. This-
where we have high community expectations.
Developing on this nonsense is
bring them to
ridiculous.
market, we want to do it right. That said, part of the announcements today and the work that we're doing and that we highlighted is to make sure that we're adding the right resources and enough resources to accelerate our mobile pipeline. Given the size of the overall opportunity, it's not just internal. We are working with external partners. We have multiple projects underway across the portfolio in various
outsource when you
stages
can.
of
It's
development. And as you know, we've announced 2, Call of Duty Mobile and also Diablo Immortal. And you asked sort of about both in status. They're both hard at work. We have no additional announcements to make at this time. But in both cases, we're looking to make sure that the IP is really well represented. For Diablo, it's an authentic and immersive, deep experience that we think getting it there has large global potential, and so it matters to get it right. And we'll share more about our titles and release dates as that comes to fruition.
Operator, we have time for one last question, please.
And we'll take our last question from Kunal Maldi.
Yeah, man, the mobile thing gets memed on a lot by the, Blizzard community, player community, but man, you look at the business side of thing and it makes all the sense in the world.
Thank you. You mentioned that King advertising net bookings grew more than 50% sequentially. It'd be great if you could provide us with some more color in your expectations in 2019.
There's that color again.
Well,
Hey,
Bobby, I would say.
Bobby. Oh, go ahead, Bobby.
Go on, Humam.
Oh, I was just going to say, Bobby, that I'm going to step back and just think about the business kind of in a few phases. First, we, decided that we really needed an ad product that worked and is differentiated. So we went and invested in the right teams to drive that. And I think it's paid off. We have a pretty good and differentiated native ad product that is working quite well with player satisfaction on the inside and increasing our monetization. And in 2017, and what you saw in 2018,
player satisfaction and successful advertising are not two things that go in the same sentence.
By lighting up more of our inventory and adding more impressions in our network. And that was a key driver as we started scaling the business. And we hit some important, financial milestones in the year in 2018. First, profitability in Q1, and then growth in every quarter after that. And I think the ad business is going to start to be meaningfully contributing to the King overall. So we expect it to cross the 100 million booking threshold this year. And as I look ahead, I think on the next phase about where the ads business is heading, it's about continued scaling. So we will continue to scale more inside the ads network at King. And we have more work to do there to enable it in more of our games. And we're continuing to educate our demand partners on kind of the power of our ad product. And there's really good momentum there. And I think kind of after that, we will think about even more ways to deploy the ad product. It could be in new mobile experiences or esports. I think the team has a ton of learnings and potential that could be applied in there.
In sports advertising,
I would just add, I think it's an excellent team. The ad product is excellent. They've started to make real inroads in getting people to better understand what the opportunities for advertisers is. And I think that I'll just echo Humam's sentiment that there's a lot of momentum in that business.
There's a lot of momentum.
And that, I think, concludes our call today. I just wanted to, on behalf of our team here, thank you all for your time and
thanks, Bobby,
and engagement today, and we'll look forward to
thanks, Dennis. Thanks,
you,
Jay,
on the road or up to our next earnings call. So thanks very much.
Talk to you next time. All right, well, there you go. There you have it. We watched all 52 minutes and 30 seconds of that. Yeah, man, that advertising thing is weird. Yeah, advertising's like this really difficult to wrap my head around thing. A lot of money in it, that's for sure. One thing that's not immediately obvious is that some of the biggest companies in the world, Google, Facebook, probably some others, they're not whatever it is that they do, they're advertising companies. Google's an advertising company. Got like global ad revenue share. Like, I don't know. Google 44%. Total online ad. Yeah, it's like Google, man. It's like, okay, quick aside on just ridiculous thing about Google. So Google keeps getting hit by fines from the European Union for the dumbest stuff. They got hit with an anti-monopoly fine because an anti-competition thing because their search engine is just too good, right? There's the European Union's like, yeah, man. There needs to be other ways to Google things, and we need to allow competition in the Googling sector. Come on, dude. And you're going to fine them for that? It's just stupid money grubbing. Anyway, we're not going to get into that. We got some work to do. Updating this here model. All right, so let's see what we can glean from this information. Alrighty. Scroll on up. That's year ended, and here is exactly what we want. All right, so 3 months ended December 13, 2018. We got product sales at 808. And 1573. That should equal that. It does. That's good. Product costs, revenue 303. So for royalties is 157. Operation and distribution is 251 million. Royalties is 21. There is sort of, Google is massive though. I mean, like, yeah, there's, were you talking about the advertising or like the search engine competition? Because like, well, it's sort of the same deal in both. Like, obviously there's a little bit more competition in advertising. But yes, as far as search engine market share, like, it's kind of a joke to think that anything can compete with Google at the moment. All right, product development 325. That's where they're allegedly going to be increasing things over the next year. Sales and marketing. Jag. Oh, that's not a Jag. What's up? I heard strange noises. I was like, what are you getting into, Jag?
I was making funny sounds at Jag.
Nice. How's class?
Oh my god, brilliant. Of course.
Good, good, good.
You were spot on. Like, all the hotties that are in training though are in it.
Oh, really?
I was kind of curious if you were nervous because it was like, you know, all the people that were virtual.
Uh-huh.
Like, you can seem like killed it. Alright, I need a shower. Cold, wet sweat. Ugh, gross. You look nice in that brand t-shirt.
Thanks.
I love that shirt.
Yeah, it's a nice one.
It's solid.
Thought I'd get dressed up for my little deal.
I like it.
Yeah.
But you're still wearing sweatpants, which is awesome. I'm gonna make some lunch after I shower. Do you want me to make you anything?
I think I'm okay right now.
You'll probably bring me, huh?
Probably, yeah.
Maybe. Maybe not.
Yeah. General administrative, that's what that is. This is the number that's going to go down as a result of the 8% layoffs. 209. Ah. All right, interest is that 4? Is that it's -4? Pre-tax income, tax is 40. Net income is 650. It's always funny when they have this weird accounting stuff where they put like loss in parentheses. Like, well, what does it actually? Okay, the loss was there. As you can see, last quarter. Yeah, they had this weird tax cut thing. I don't know, man. Like political nonsense. And then our EPS was actually. Hold on. Oh, we gotta get our shares on there, which is 76, 8.5. Cool. Neat. All right, so that's the model updated. And sales revenue. I guess this is like a per quarter basis. It does make sense that the sales would go up for Christmas season. All right, cool. And we're not going to do balance sheets or cash flow statements at the moment. Okay, well, yeah, let's just take a look at what's going on here. So at the moment, it's getting in from there per share. Yeah, still think that according to my current model prediction, Activision Blizzard is a short. But that's based on information that's probably not updated. So we do know that general and administrative is going to be decreasing by 8%, approximately. This is super approximation. But we have the information, so we might as well use it. Sales and marketing probably also be decreasing. Let's just use the 8% as well. And this guy is actually increasing by 20%. Again, these numbers are like, I'm super fudging these numbers, but hey. And then we can just kind of keep the current predictions there. Revenue growth. Let's see, that's actually, they think it's going to be a decrease. I don't know. They did say it on the call that they think this is a conservative estimate, so let's give it a little bit more. And yeah, I don't know why that's got 1.2. Let's just put this as a little more conservative as well. Maybe we can do like 4, and then this kind of tails off. Yep, and then what tax rate? Is this, where am I editing this? That's just the average. We're gonna go 24%, because that's what they're predicting. Probably for this foreseeable future, you know, right? Anyway, the result here is, how does this affect things? It's, what? NPVs just astronomically going down. Anyway, this probably takes a little bit more getting used to. But anyway, we got the data in there. Let's kind of wrap up what we think. What did we think of all this? I think overall, from a kind of a holistic standpoint, looking at it from less of an empirical standpoint, more of it's the opposite of empirical. Holistic. We're just going to go with holistic. Yeah, Blizzard's in a pretty good spot. Like, obviously, the optics of this earnings call is dominated by the fact that they had record profits for a quarter and let go of 8% of their workforce. And yeah, that's just going to be the headline. Like, there's no getting around that. That's too sensational not to. And they didn't really address it in the conference call either. At least not directly, right? So there was lots of talk about how they're, refocusing their efforts and redistributing resources to try and, focus more on the main products, consolidate the kind of support and ancillary stuff, sales, marketing, support staff. But yeah, when it comes to news, emotion is kind of king. And the emotion there is, you fired a bunch of people when you had record profits. So there you go. Regardless of whether or not it made good business sense or not, that's just something they're going to have to get over. And I don't know, like, it does sort of seem to me like people have kind of forgotten about it already. Maybe not entirely. Obviously, the people that got let go are still, it's very much real for them. We've got Githesons who's been streaming on Twitch recently, and that's still very much in the forefront of his mind, and anyone who's watching the stream, obviously. But that's mostly kind of isolated to sort of the World of Warcraft community that I'm more or less plugged into. I don't know. I think the unfortunate case is that I doubt that the main story coming out of this is going to have much longevity. But only time will tell. Purely from a business standpoint, though, I do think that Activision Blizzard is very well positioned. As I've talked about before, they have the kind of global trifecta of NA, EU, and Asia. As far as their markets go, they've got Activision for console-focused stuff, they've got Blizzard for PC-focused stuff, and they've got King for their mobile-focused stuff. And obviously there's some crossover between all three franchises, which is good, because they can kind of share resources and try and get some more uniformity across platforms, across all their products. That's good. That's good for longevity. Diversification is great. The more diversification, the more security there is, the better security, the better games they can make, the longer the company can exist. So, I don't know. I think that's good for us as actual users and gamers in the long term. Well, it has the potential to be good for us. We'll see. And then the other thing that Bobby brought up that I hadn't thought about before was the sales models for all their games, right? They've got free-to-play, they've got subscription, they've got microtransactions, they've got upfront costs. That's good too. All of the diversification, all of the options, get out there to as many possible users as possible. Yeah, I don't know. I like Activision Blizzard as a company still, despite the fact that they're, certainly don't have the best optics at the moment. From purely a business perspective, purely a, like, this company seems pretty solid. Like, yeah, it all checks out. It all checks out. Yeah. trying to think if I have any more closing thoughts before we sort of end the quarterly earnings time. I guess maybe just reflect back on this quote that I pulled out from the conference call. One of the things that gets lost in the discussion of economic models is player experience itself. I don't know. That quote seems to go very much against what Mr. Kotick has been portrayed as in the gaming community as of late. I don't think that this man is completely out of touch with his player base. The research I have done on him in the past seems to indicate somebody who's not necessarily a passionate gamer like, people who play his games are, but he's also not completely out of touch. Probably do better. But the fact that he said that, whether or not he was, bluffing or reading off of or just faking it, and the fact that he even just said it, it means that he's aware of it. And that's better than what he's been portrayed as. So, all right. Go ahead and wrap up the financial portion of this